There is so much happening at the moment in investment markets. It's difficult to keep up. But in our month-end episode, we always try and capture some of the main themes that have occurred in the previous month and maybe look ahead to what may be happening in June. Dean, you're in the hot seat this month. You're very welcome. I'm going to ask you, what are the three big stories in May?
Great. Thanks, Peter. So let's focus on equity markets first, which were flat in local terms over the month of May. And the big theme there has been AI. Unless you're in the habit of opening up your PC or your laptop to have a look at the components, you may not have heard of NVIDIA. They make highly complex semiconductor chips, which very much sort of focus on the needs and demands of AI. They announced results in May, in which they massively increased revenue guidance for the next quarter from $7 billion to $11 billion. They saw their share price rise 31% over the course of the month. And it's not just NVIDIA. A number of technology companies, particularly those with hooks into AI, have driven the majority of equity market returns in the year to date. And if you were to look at this on a global basis, equity markets are up about 8% in the year to date. 6% of that can be attributed to the technology sector. So quite a narrow market.
Wow, that's incredible. I think that's amazing, that narrow market of what's been driving things. So when we look at global equity markets, for a euro investor, up about 2.5% in the month. For a UK investor, up about 0.5%. So good performance. But as you point out, driven by those mega tech names. So what's the second thing that's caught your eye this month?
Second thing is there's been more will they, won't they than a Hollywood rom-com when it comes to central banks and interest rates. If we go back to the beginning of May, markets were pricing in a next to 0% chance that the Federal Reserve would raise interest rates at their next meeting, which is in the middle of June. As I sit here today, markets have pushed that closer to about a 50% chance of a rate hike. So things have changed pretty dramatically in a fairly short space of time.
Okay, so Dean has a thing for Hollywood rom-coms. Look, that's a massive move, change from 0 to 50% chance of a rate hike. What has changed markets' mind on that?
I guess it's quite simple, really. A lot of the indicators that we use to evaluate economic conditions are still relatively positive. So job numbers, consumer spending, import statistics all point to the fact that in the US, higher interest rates haven't yet subdued activity to the extent that markets or even central bankers expected. If we look closer to home, again, economic growth has been pretty good. Headline inflation has fallen a bit to about 8.7% in May, but core inflation, which excludes energy and food, that actually went up in May. So that says that maybe the Bank of England have got a bit more to do when it comes to interest rates. Interest rates themselves, they're a bit of a blunt instrument when you compare it to what the central bank is actually trying to achieve. And there can be quite long and variable lags between a change in the interest rate and then an impact on economic activity. Central banks don't yet know if all the tightening they've put into the system so far is already acting on the economy, or if it's about to hit and they should be holding off and waiting. It's quite the tightrope for central bankers to be walking.
Okay, yeah. So I always think about this as like you're driving your car with your eyes closed, and there's a corner coming up, and you just don't know when to turn the steering wheel or not.
Sure.
But look, so that question of sort of are we there yet will continue, especially if economic conditions prove to be resilient in ways. What is your last trend of the month?
Got to be the debt ceiling.
Okay, so I knew you would pick this. To me, it's the winner of the most uneventful event of the month. So much is written and spoken about it, but guess what? They just kicked the can down the road a little bit further.
And probably better that it was uneventful than eventful. But you're right, Peter. There was some volatility in short-term bond yields, but it really wasn't that big an event overall. Bonds were actually weak in May. They were down about 2%, but that's probably more to do with our previous points about economic growth statistics being better than expected, and therefore sort of slightly changing the possible path of interest rates. The other aspect, I guess, is that the agreement reached will have some impact on the outlook for the US economy. As part of the deal, the Republicans appear to have secured some constraints around fiscal spending by the current government. And some commentators reckon that this could be about a hit of 30 basis points or so 0.3, 0.2% to US GDP.
Okay, so those are your three sort of things that happened in May. What about looking forward to June? Give me one thing that you're mindful of.
I think probably a bit more market uncertainty around the certainty or not of interest rate hikes. So the Fed particularly I'm thinking of here, we've had consequent increases at all of their meetings for at least about the last 10. But this coming meeting, as we mentioned earlier, there's a bit less certainty around it. The ECB and Bank of England, by contrast, look quite clear in terms of market pricing around what they think interest rates are going to do this month.
Okay, thanks for that, Dean. Okay, finally, Shane started this last month, a stat of the month, and I adore stats, so I'm kind of excited about this. So my one stat for the month is going back to what you're talking about, NVIDIA. NVIDIA last week had the largest one-day move ever of any megatech company. It was up around 25% in one day. To give you some context on that daily increase in value was close to the total value of Shell, which is the second largest company on the UK stock exchange. So that's my stat of the month. Dean, thank you so much for your time this week, and we'll be back again next week with a topic that's caught our eye.